Hello friends, how are you? I'm Ratinder Chopra. Welcome you in Bankers on Arena new video. This is very important video today point of view because JIB paper 1 is on 11th June, that is tomorrow. So I come out with a special video for JIB paper 1 for the all aspirants, and this will be also be very important for the bank promotion exam who will be going for bank promotion exam. These are one liner question, very important, which we are generally missing. So once again I request everybody, please like the channel, subscribe the channel, share the video, like the video, and watch till end. So are you ready everyone? Okay, thank you. So today special for JIB paper 1 PBB, that is principle and practice of banking, and bank promotion exam equally important. This is a one liner question. Please like, share and subscribe the channel. Thank you. So we are starting with the question number 1. Very important question. This is regarding the lending of working capital. Question number 1. JAIIB committee or turnover method is used for working capital limit up to 5 crore. So JAIIB committee. So JAIIB committee is for lending to the for working capital. Working capital means capital means current asset financing. For current asset financing, JAIIB committee or turnover method is used. This is used for the limits up to 5 crore. 5 crores. So maximum limit that can be financed under JAIIB committee is 5 crore. So what is JAIIB committee? How it is assessed? JAIIB committee recommendations or turnover method is used in limits up to 5 crore. And what is that JAIIB committee? So first of all, the borrower comes out with his projected sales, projected turnover. He'll come with this projected turnover. How much will be his projected turnover? On that basis, the bank is financed. Supposingly, he comes with a projection of 1 crore. He is saying, I need 1 crore. So, 1 crore projection is showing. We presume the bank is accepting that. So, how much that can be given under JAIIB committee? That will cover under question 2. What is the requirement of capital of firm under JAIIB committee? This will be 25% of the projected turnover. So how much can be financed to the borrower under JAIIB committee? If the projected turnover 1 crore, that will be 25% of the projected turnover. That will 25 lakh can be financed under this turnover method. Then question number 3 comes here. How much bank finance and borrower contribution under JAIIB committee? We say 20% bank will finance and 5% will be brought by the borrower. So here the question comes up. We have seen the projected turnover 1 crore. Then firm's requirement will be 25% of the projected turnover, that is 25 lakh. So how much borrower will contribute? 5% of the projected turnover. So out of 1 crore projected turnover, 5% will be 5 lakh. 5 lakh will be bought by the borrower and 20 lakh will be financed by the bank. So question number 3. So coming again. So 1 number question, JAIIB committee method is used for working capital limit up to 5 crore. Then what is the requirement of capital of the firm under JAIIB committee method? This is 25% of the projected turnover. Then third, how much bank finance and borrower contribution? Here bank finance will be 20% and borrower will contribute 5%. So clear about it? So let's go to the next one. Then there is another method that is called Tandon committee method. So how much maximum loan under Tandon committee method of bank finance? How much we can give loan under Tandon committee? Working capital. Here we are talking about the working capital, short term, but which are basically cash credit or overdraft. So how much maximum loan under Tandon committee method of bank finance? Above 5 crore up to 10 crore. So under Tandon Committee, the maximum loan can be given for working capital is 10 crore. So this Tandon Committee is also called first method of lending or second method of lending. Mainly it is called second method of lending. So what is the borrower margin under second method of lending of Tandon Committee? That is called 20% of the total current assets. Total current assets. How much borrower finance will be here? That will be 25%. Okay. Now coming to the what is gross working capital? We are talking about the working capital. What is working capital? The current asset required for the day-to-day working of the unit. That is basically current asset. That can be current asset can be basically cash, stocks, mainly stack, cash, stocks, book debts, or marketable securities we can say. So these are basically the current asset. The bank is financing current assets generally. So what is gross working capital? Gross working capital is the total current asset of the firm. And then what is net working capital? This is current assets minus current liability. When we reduce current liability from current asset, it becomes net working capital. This is also called margin. This is also called margin. Or this is also called current ratio also. This is also called current ratio also. So what is net working capital? Current assets minus current liabilities. Then the next is what is working capital gap? What is working capital gap? This is the gap which bank finances. This is the gap bank finances. What is working capital gap? This is current assets minus current liabilities less bank borrowings. Means if we reduce bank borrowing from these current liability, that gap will come which bank has to finance. Okay, so what is working capital gap? Current assets minus current liability minus bank borrowing. Supposingly, current assets are 1 lakh, okay, and current liabilities are 30,000. So this 70,000 is what is called working capital gap. So this is if you reduce the bank working also, so this is the gap. This is the bank borrowing which bank has to finance. So what is working capital gap? Current assets minus current liabilities minus bank borrowing. If you reduce current asset bank borrowing from current liability and then deduct from current asset, that will be called your working capital gap. So are you clear about it? Okay, let's go to the question for 9. Then there is another method, that is cash budget method of lending, is used for limits above 10 crore. This is used for limits above 10 crore. If the limits are for more than 10 crore, this cash budget method is used. So in the cash budget method, question number 10, in the cash budget method is used for which industry? These are used for seasonal industry. Cash budget method is used for seasonal industry like tea, sugarcane, etc. So this was about your working capital. Now we're coming to the important NPAs and income recognition. Very important. So question number 11. NPA are defined under. Where NPAs are defined? Non-performing assets. Non-performing assets, those assets we do not generate any income. So NPAs are defined under as per RBI IRAC issue rule and application conclusion norms. NPAs are defined under RBI IRAC. IRAC norms क्या हैं? That is issue rule and application conclusion rules. Now the question rises, when CCOD account becomes NPA? Generally we know all accounts which are more than 90 days overdue, they becomes NPA. So here we are doing a special, when a CC or OD account becomes NPA. That will become NPA when the account remains out of order for a period more than 90 days. Means question number 12 says, when a CCOD account becomes NPA. When it will become NPA? When the account remains out of order for a period of more than 90 days. more than 90 days if the CC and OD account becomes NPA when account remains out of order. Now, what is out of order? That we'll discuss now. What is out of order? Question number 13 will say, what is out of order? Out of order status means an account should be treated as out of order if the outstanding balance remains continuously in excess of the sanctioned limit drawing power. Supposing the sanction limit is 1 lakh and drawing power is 1 lakh. So if the balance remains above it, maybe 1 lakh 10,000 for more than 90 days over index of sanction limit. And secondly, in case where the outstanding balance account is less than the sanction limit drawing power, but there are no credits continuously for 90 days or credits are not enough to cover the interest debited during the same period. So what is out of order? So what is out of order? Out of order means an account should be treated as order if the outstanding balance remains continuously in excess of the sanction limit or drawing power. And secondly, in cases where the outstanding balance in the account is less than the sanction limit drawing power, but there are no credits continuously for 90 days or credits are not enough to cover the interest debited during the period. It means one is when the account remains overdue in excess of the sanction limit, and secondly, supposing the limit is 1 lakh and the balance outstanding is 90,000, but there are no credits in the account for 3 months, or supposingly interest debited is 5,000 and the amount received is only 4,000, then that account will become out of order and that will also be called a NPA. Okay. So when an agriculture account become NPA, this is very important. Agriculture account and NPA. Number one, on non-receipt of principal or interest for 2 seasons in case of short-term loans. Short-term crop loans are those loans which are for 1 year period, which are given for 1 year period. The crop loan which is given for 1 year period, that is called your short-term loans. So when agriculture account become NPA, on non-receipt of principal and or interest for two seasons in case of short-term crops, and on non-receipt of principal and or interest for 1 season, long-term 1 season and short-term 2 season. If the interest and principal is not coming, that will become NPA. So let's go to the question number 15. Now we're coming to the NPA special mention accounts. These special mention accounts are not NPA, but they are likely to be NPA, potential NPAs. So there are 3 types of SMA. Special mention accounts are also called SMA. So an account which is overdue for 30 days, 30 days that the money has not come, that will be called SMA 0. That is SMA 0. Then if no amount has come from 31 to 60 days, that will become SMA 1, and 61 to 90 days SMA 2. After 90 days the account will become NPA. So SMA 0 to 30, 0, 31 to 61 SMA, and then 61 to 90 days, that will become SMA 2. So are you clear about it? Special mention accounts. Now we are coming to the substandard assets. There are 4 types of assets. One is standard asset. Special mention is part of standard asset. Then second is substandard asset. So what is substandard asset? Substandard asset. What is substandard asset? Substandard asset is which has remained NPA for a period less than or equal to 12 months. supposingly account has become NPA on 2020. So after 31st March 2021, it will be called a substandard account. 1 year from the date of NPA. NPA date is 1/4/20 and up to 12 months. That will call your substandard asset. Then your doubtful asset. Now doubtful asset comes. If it has remained in a substandard category for a period of more than 12 months. More than 12 months means if the account has become NPA on 1st April 2020, so it will remain up to substandard category up to 21st March 2020. If it exceeds that period, supposingly the account remains substandard for more than 12 months, means it is remain NPA on 31st March also. So that will become your doubtful asset. That will become your doubtful asset if it has remained in the substandard category for a period of more than 12 months. So that will be called your doubtful assets. So then the last one is loss assets. Now coming the loss asset. A loss asset is one where loss has been identified by the bank or internal or external auditors or the RBI inspection, means when an account has become NPA for a long period and there are no assets there also and there is no chances of recovery also, and bank auditor has also seen it, there is no chance of any recovery, maybe internal and external auditor also, or by inspection no amount is going to come here, then they declare that account as loss asset. So loss asset is one where loss has been identified by the bank or internal or external auditor or RBI inspection. Okay, so we are coming back again to doubtful assets are of three types. Number one, doubtful one. What is doubtful one? Doubtful one, if it has remained in substandard category for a period of 12 months. अगर 12 months तक account remains doubtful, then it will be called up to doubtful number one. Now doubtful two, doubtful 1 year up to 3 years. 1 year above and up to 3 years in substandard category, that will be called your doubtful assets. And then doubtful 3, doubtful 1, if it has remained in substandard category for a period of 12 months. Then doubtful 1 year up to 3 years, and doubtful 3 if it is more than 3 years. Three types of doubtful, 1 to 3. So we'll coming to the provisions also later. Now we are coming to another important issue. Question number 20. When central government guarantee advances become NPA? When central government guarantee accounts become NPA? As a standard rule, where the government has given the guarantee, central government has given the guarantee, the account will not turn NPA unless the central government withdraws or revoke the guarantee. If we say we are not giving the guarantee more, then only the account will become NPA. So when central government guarantee advances becomes NPA, the credit facilities backed by guarantee of the central government, though overdue, may be treated as NPA only when the government repudiates its guarantee when invoked. Okay, but no relaxation in case of state government guarantee accounts will be given. Okay, so when central guarantee advances will become NPA, general rule, they will not become NPA only when the central government withdraws the guarantee or invokes the guarantee, then that account will become NPA. But in the case of state government guarantee, standard norms will apply. Another important thing, in central government accounts, though the account will not become NPA, NPA नहीं बनेगा, still If the amount of interest is not received, then that amount, the amount which has been accrued will not be taken into income, not to be taken into income if it is not received. Yes, account will not become NPA, but this is applicable only for the central government, not for the state government. Okay, thank you. So let's go to the question number 21. When credit card accounts become NPA? Here, important thing is, if the minimum amount due is not paid fully within 90 days from the payment due date. When credit account becomes NPA? When minimum amount due is not fully paid within 90 days from the payment due date. Supposingly, total amount due is 25,000. Total amount due is 25,000, but the minimum due is 5,000. If the borrower has paid 5,000, then the account will not become NPA, even though the due amount is 25,000. Okay, clear about it? Total due 25,000, minimum due 5,000. If the borrower pay 5,000, it will not become NPA, even though the amount due is 25,000. If he is pay 4,000, then the account will become NPA. Okay. Another important issue: regular ad hoc limits where stock statements have not received will become NPA. Supposingly, ad hoc facility has been given, temporary overdraft has been given, where stocks not received, then that will become only after 180 days. After not 90 days, after 180 days. So the question number 23, income recognition. Income recognition means when the amount of interest charges will be taken into income. Income from NPA is not recognized on accrual basis. Very important. If interest is accrued, bank cannot take that into income, but is booked as income only when it is actually received. When it is actually received, then the amount can be credited into income account, otherwise not. However, interest on advances against term deposit, NSC, IVP, KVPs, and I policy may be taken into income account on the due date, provided adequate margin is available in the accounts. So income recognition simply says income from NPA is not recognized on accrual basis, but it is booked as income only when it is actually received. However, interest on advances against term deposit, NSE, IVP, KVC, life policy may be taken into income account on the due date, provided adequate margin is available in the account. So clear about it? Question number 24. Consortium accounts NPA. When account in a consortium become NPA, this is based on the record of recovery of the individual member banks. Means if one bank account is NPA, other bank account will not become NPA. Means if a consortium of 4 banks and A, B, C, D, A account is becoming NPA, B, they are receiving the income, C is also receiving the interest, and D is also receiving the interest, then only A account will become, A bank account will become NPA, not the other banks. So clear about in consortium accounts, based on the record of recovery of the individual member banks, means if one bank account is NPA, other bank's account will not become NPA. Very simple, very simple. So clear about it, consortium account. So if there are 4 banks in consortium, A is not receiving the interest, etc. After 90 days, A account become NPA, B are receiving, C are receiving, D are, then only A account will become NPA, not others. Then how much, now question of provisioning under substandard asset. Now how much provision has to be made? Provision under substandard assets. Secured 15%, unsecured portion 25%. Means if an outstanding is 1 lakh, which is secured by 50,000 and unsecured 50,000, then how much provision will be charged? On 50,000, 15%, that means 7,500, and on another 50,000, 12,500. So that is what is charged under substandard asset. So provision under substandard asset, how much? Secured portion 15% and unsecured portion 25%. So are you clear about it? So question number 25, provision under substandard assets. Secured portion 15%, unsecured 25% means if outstanding is 1 lakh, 50,000 is secured and 50,000 is unsecured, then on 50,000 there will be 15%, 7,500, and another 50,000 which is unsecured, 25%, that means 12,500, that means total will be 20,000. Okay. Then comes your question number 26. So that was under substandard asset. Now we are coming under provisioning. Question number 26, provisioning under doubtful asset. Here unsecured portion 100% and secured portion, if doubtful up to 1 year 25%, doubtful up to 1 to 3 years 40%, and more than 3 100%. So once again we are taking here, supposingly this account is substandard, 1 lakh outstanding, 50,000 is secured and 50,000 is unsecured. So in this case, what will happen? If it is doubtful up to 1 year, then 25% will be 100% unsecured and 25% on the unsecured. So coming here, supposingly 1 lakh on 50,000 100%, and another 50,000 12,500. So here it will be 60,000 to 500. If it is more than 3 years, 1 to 3 years, then 40%. Here 100% 50,000 and secured 40% 20,000. That means 70,000 will be provision in the case of 1 to 3 years, and in the case of more than 3 years it will be 100%. Total means if a doubtful asset is more than 3 years, then total amount will be provided. That means 100% provisioning. Now coming to question number 27, provisioning on loss assets and fraud cases. Provision will be 100%. If an asset has been declared as all loss asset or fraud asset, then 100% provisioning will be provided. Okay, thank you. So now question number 28. This is an important question. CDR. What is CDR? Corporate debt restructuring limit. So what is the maximum corporate debt restructuring limit? 25 crore means up to 25 crore limits corporate debt restructuring can be done. So maximum corporate debt restructuring limit is 25 crores. Now question number 29. Important questions. Minimum capital requirement limit of public limited company. What should be the minimum capital of a public limited company? No limit now. Now there is no limit. Recent amendment, no limit now. Previously it was 5 crore. Now minimum capital requirement limit of public limited company is no limit now. Question number 30. If garnishee order is received without description of amount, then full amount to be attached. What is garnishee order? Very important. Garnishee order. Garnishee order is issued by the court, by civil court, directing garnishee. Garnishee. Who is garnishee? Garnishee is always bank. Garnishee is always bank. If garnishee instructing the bank to attach the account of their customer, which is known as judgment debtor, and pay this amount to the judgment creditor or to the court as per direction. So this is what is called your garnishee order. So if a garnishee order is received without description amount, then full amount is to be attached. Full amount to be attached. So garnishee order is of two types. One is garnishee order, that is the simply an instruction given to the bank to attach the account of the customer. If any objection, come to the court and then court will decide on hearing. After hearing the bank, another order is issued which is called absolute order. Absolute order, that is absolute order issued by the court to bank. So if garnishee order is received without description of amount, then full amount will be attached. Joint accounts cannot be attached. Okay. Now question number 31. What is the limit within which the borrowing made under ways and means advances of the RBI to be repaid by the state government? Whenever state government or central government needs some temporary limits, then they go to the RBI and RBI gives them temporary overdrafts, which are called ways and means advances, which has to be repaid by the government within 3 months. 3 months. Question number 32. What is the deposit limit on saving accounts in the payment banks? How much can be deposited in the saving bank, in the payment bank? Limit is 2 lakh now. Answer is 2 lakh. Okay. Let's go to the question number 33. What is the share capital of central government, state government and respective banks in regional rural banks? In regional rural banks, what is the share? Central government is 50%, state government 15%, and respective bank 35%. So what is the share? Central government 50%, state government 15%, and bank 35%. Now we're coming to question number 34. Question number 34. What is the maximum compensation to be paid by banks? Question number 34. What is the maximum compensation to be paid by banks in case of event such as fraud by banking professionals, fire or building collapse in case of locals? So what is the maximum compensation to be paid by banks in case of events such as fraud by banking professional, fire or building collapse in case of locals? So this is 100 times of the rent. So maximum liability of the bank is 100 times of the rent. If the rent is 1000, then maximum liability is 1 lakh. Okay. Now question number 35. Priority sector lending certificates are issued by banks. Which are priority sector lending certificates? These are issued by those banks which have overachieved their priority sector target and purchased by those who are not able to achieve the priority sector lending. 36. What is the maximum self-help group loan amount considered under priority sector norms? How much can be considered as priority sector under SCG loan? 20 lakhs. Previously it was 10 lakh. Now the question number 13.7. Minimum amount of certificate of deposit. This is 5 lakh or multiples of 5 lakh. 5 lakhs or multiple of 5 lakhs. Previously it was 1 lakh. So it is now same with commercial paper. Certificate of deposit now have to be issued with a minimum amount of 5 lakh and multiple of 5 lakh, just like commercial paper which are to be issued with 5 lakh and multiple. Previously it was 1 lakh. Question number 38. Question number 38. Mortgage, a mode of charging security, has been defined in Transfer of Property Act. Answer is Transfer of Property Act. Mortgage, a mode of charging security, has been defined in Transfer of Property Act 1882. Question number 39. RBI published a booklet named Be Aware for. Answer, awareness to public for cyber frauds. RBI published a booklet named Be Aware for awareness to public for cyber fraud. 40. Question number. Floating charge. Floating charge is charge of the entire assets of the or part of the assets. Supposingly, a bank has given loan to a company for purchase of a machinery. So if bank is taking charge only on the machinery, that will be called fixed charge. If the bank says no, you have to give other charge asset also as a security, then that will become a floating charge. So what is lien? Lien is to be created on goods and security. Lien is created on goods and security. Pledge is on movable goods with which is possession with bank. Pledge is to be secured on movable goods with possession with the bank. And 43, hypothecation on movable goods with possession with the borrower. In hypothecation, the possession and the ownership remain with the borrower. That is only on movable goods. Then mortgage is on the immovable property. So question number 45, calculation of period of time bar. Time bar document we are seeing, date of expiry. So when we are calculating that date of expiry, then the day of the document is to be excluded. Supposingly, a document is signed on, executed on 1st January 22. So it will not expire on 31st December 2024, 22, 23, 24, 25, sorry, 25. Rather, it will on 1/1/26. 3 years. If it is of a 3 years, then it will be on after 3 years. Let it be, we will take something a little bit different. So the day of the, in this case, calculation time period, day of document is excluded for expiry. Okay. Understood? Question number 45. This is important question. Calculation of period of time bar. Day of document to be excluded in the case of calculation of period of time bar. Okay. Let's go to the question number 46. Question number 46. What type of charge is created on LIC policy? When a bank is giving loan on LIC policy, this is called assignment. Question number 47. What is the maximum and minimum maturity of certificate of deposit issued by financial institution? What is the maximum and minimum maturity of certificate issued by the financial institution? This is 1 year minimum and maximum 3 years. In case of financial institution only, if it is issued by the bank, it will be from 7 days to, for bank, 7 days to 365 days, 1 year, up to 1 year. But in financial institution, 1 year, 3 years. Question number 48. How much loan can be sanctioned to startups engaged in agriculture and allied services? Answer is 50 crore. Answer is 50 crore. Question number 49. Loans up to rupees against pledge hypothecation of agricultural produce for a period more than 12 months with NWR, negotiable warehouse receipt. This is 75 lakh, previous 25 lakh. Very important question. How much loan can be given against the pledge hypothecation of agricultural produce for a period more than 12 months with negotiable warehouse receipt, means which can be transferred. If a farmer has brought the his produce in the cold storage, if it is a negotiable warehouse receipt, then maximum loan can be given is 75 lakh. Previously it was 50 lakh. And the last question is, what is the minimum credit rating of company to be eligible to issue commercial paper? Commercial paper can be issued by the corporates. For that person, what should be the credit rating minimum? A3 as per SEBI guideline, as per SEBI. A3. So these were the 50 questions. Very important question. You can go through within half an hour. You can speed up it, or maybe 45 minutes. Must do it because the paper is very near. So once again, request all of you to please like, subscribe and share the video. Thank you very much from Bankers Zone Arena, and also best of luck to all of those who are appearing for the JAIIB exam. So best of luck. So thank you. Please do subscribe and share the video. Thank you very much. Thanks a lot. Thanks a lot.